Hi, and welcome to another edition of TraderCast's Daily Market Report. We are currently looking at the multiple time frames analysis for euro-dollar with our daily, 4-hourly, hourly, and 15-minute. So our daily time frame is clearly confirming the downtrend, but we are seeing a bit of an oversold bounce back, and the price is currently capped by 20-period moving average, and also a cluster of these lows, and our 50-period moving average is at 26.59. Going back to our 4-hourly time frame, our upside resistance is clearly defined here at 26.20 with our 200-period moving average. But also we could see this coiling action which resembled a symmetrical triangle formation, which is normally a continuation pattern that kind of spiked on the way down, picked loads of stops, and then spiked on the way up. And we can see this in 15-minute and hourly as well, because there was loads of orders around here, around 25 level. So our hourly time frame, it's confirming exactly the same price action, but the price is currently above all three moving averages, and therefore indicating that potentially we could see a little bit more upside move, and also our 15-minute time frame as well. So let's go back to our advanced charts and see the levels. So the daily time frame appears to be in a clearly defined downtrend. We can see that there is a falling resistance trend line, and also the price action is below 20, 50 and 200 period moving average. But we talked about this before. The first leg down was actually from 1.4, or just a closure. The closing levels were around here, and that first leg down would equate to roughly the same number of points for this last leg down. So we had the first leg down, then a shallow retracement, then we had a second leg down which was powerful, and then we had kind of a more spiky retracement again, and then now we are in this final leg down. So fundamentally there is a good reason for this to go down lower. Okay, so we have hawkish Fed, and then we have Mario Draghi who's starting with QE, and it's talking the euro down. But oversold bounce backs are quite possible, because these levels here would probably be seen as a good profit taking levels by all of the disciplined traders, and potentially some institutional traders who were holding this position short. So that's levels that we kind of achieved at 23.60, which is this low, held, and that coiling action or a triangle formation that we saw would point to a small breakout above 25 levels, so 12500. That's where most of the stop losses were for anybody who was short, and that was kind of picked up on Friday as well. And also the significant bit is the current price is slightly higher than this previous low here as well. So the levels that I'm keeping an eye on at the moment would point to a couple of things now. So I'm looking at this previously important rising support trend line, which if tested from underneath would be a logical resistance area, therefore another shorting opportunity for anybody who is bearish. Also, I'm looking for a distance of this triangle on a breakout, which could potentially point to this blue line, which is my 50-period moving average in daily, and also I can draw a little trend line going this way as well, which will correspond to the same level around 27 even. The significance of that level is even bigger if I apply a basic fib and I go from the swing high to the swing low, and in that case that gives me a full 61.8 retracement at 26.87, call it 127. So the upside resistance is at 25.60, followed by 26.24, and very significantly 26.87. Alternatively, if the current price action returns back inside below this 125.00, then 124.00 followed by 23.60 would be logical downside support. Loss of 23.60 would potentially target 123 very, very quickly.